Good morning, everyone, and thank you so much for tuning in with me today. My name is Corey, and today we are going to go over XRP, Ripple, SIBOS, blockchain, crypto, anything that's going on, anything that can help us understand this flash crash. I don't think much can understand this flash crash, except for maybe the big guys trying to short the market right before the October effect comes in on the regular stock market. Maybe they're trying to push the price down so they can get everything as cheap as possible before the regular stock markets start going crazy. Who knows? But I'll tell you that I'm buying the dip. I'm not a financial advisor. I'm not trying to give out any financial advice. Please know that. I'm just doing this for entertainment purposes. I really, really enjoy this company. I really, really enjoy doing these videos. And I think that there's something here. And so that's why I'm doing this. But please make your own decisions when you make purchases in crypto. Only invest what you're willing to lose. I just want to make these statements so that I don't get pinned by anybody making decisions that are not well thought out, But anyway, 23 cents right now, massive crash in the markets. But it's not just Ripple, and it's not just XRP. It is totally market wide. You can see all the coins are down 13%, 14%, 22%, 13%, and in fact, XRP is doing pretty well. It's holding up better than most of the other currencies. Bitcoin is down to $8,400. That's on sale. That's go out, buy a Bitcoin, because I don't see it going much lower than that. But go out. If you have the money to buy a Bitcoin, go buy XRP instead. But anyway, so there's not much news out to why there's a major crash. My only assumption is that because the futures contracts have opened unbacked, people are just shorting the market to try to get as much value out of the next run up that they can. But anyway, moving on. So this week has been a major financial event in the world. It's called SIBOS. SIBOS is the annual conference, exhibition, and networking event organized by the Swift financial industry. So it's about 8,000 business leaders and major the major decision makers of the globe. All 8,000 or more of them, they get together and they talk about financial institutions, market infrastructure, multinational corporations, and technologies. And they just share each other's data and technology and try to come up with the best solution to keep the world moving forward in terms of the financial economy. So that event is going on, and who else would we expect to be in attendance, obviously, other than Ripple? And this is the map of SIBOS that's been happening over the past 4 days. This is the entire map right here, the whole event. There is going to be a Ripple event today in this plenary room right here, and of course we've got Ripple right here in the bottom corner. But I also wanted to show you that Ripple is placed directly next to the Dow Jones, so that's pretty cool. Also with the Treasury Intelligence Solutions, so in a good spot nonetheless. They're definitely going to try to visit the Dow Jones, so they're definitely going to come and see Ripple. Ripple today is going to be presenting at 10:45 to 11:15. They have the future of cross-border payments, transforming remittances with digital assets. But as you can see, all day long, SIBOS is going to be running events that talk about the upcoming technology that is going to be implemented in the future financial infrastructure. Especially with KYC, so identity solutions coming onto the digital market. Even in the very beginning, we've got a global instant payments journey. We've got JP Morgan Chase talking. There's just a bunch of really high up strategists and business leaders that are going to be talking about how to change everything, how to make everything better for the world and faster for the world. In yesterday's news, the SEC had a extensively long talk about crypto and moving forward in the financial markets and trying to get some kind of regulatory clarity on what what's going on, because one of the big points that was said in this meeting was that the companies in the United States are standing by waiting for the SEC to give them some kind of regulation because they don't want to get in trouble. They're just sitting back and saying, hey, you want us to be under strict guidelines, but we don't know what those guidelines are, so we're not going to participate until you tell us that. And since they're taking such a long time to do that, that's why companies are leaving and going to other countries. And that's happening at an alarming rate because this kind of technology is fast moving. So in the in the meeting, it was talked about that, and I think I've got it over here. Okay, so we've got Sergeant Obi-Wan on Twitter saying that the SEC at about I have it right here, it's 2 hours and 39 minutes in, you've got Chairman Jay Clayton, and he starts talking about how the SEC does actually kind of have regulations in mind, and what he's saying is that if the token is a token of utility, meaning if it moves money around, yeah, good to go, is kind of what he says. And what do we know that is a utility token that's supposed to move money around instantly? XRP. But he says if you're trying to build server farms, if you're trying to build walled gardens, that is deemed a security. So like the JPM coin, the Wells Fargo coin, the Zuck Buck or the Libra, like those are all going to be securities. But since XRP is going to be a utility to move those tokens from one place to another, that's not going to be deemed a security. So in a way, he didn't say no, XRP is not a security, but he did lay out the framework that says XRP is not a security because it's a utility moving these other securities back and forth. Actually, I'm going to get rid of some of these tabs so I just kind of like know what I've gone over. So we've got some news. Bitcoin's hash rate, along with its price, experienced a flash crash, highlighting pure proof of work vulnerability. Now, this article came out, it's on dashnews.org. This week by the Bitcoin hash rate dropped significantly in a plunge in network's mining power of 40%, according to data from Fork LOL. Over the course of about 14 hours, the network's hash rate dropped from around 107 exahashes to a little over 59 exahashes. This means that nearly half of all the Bitcoin network security was removed over the course of a half of a day. In a half of a day, 50% of all the Bitcoin security was completely removed. And I know that we just had a video talking about the significant power that China has over the Bitcoin network. Now, if China already's got 71% of the Bitcoin network and 40% of all of the network has just dropped in security, what kind of power do you think China has over this network now? This means that nearly half of all the Bitcoin's network security was removed over the course of half a day, making the network more vulnerable to attack than it had previously been. At a time of writing, no specific cause for the sharp decline in hash rate has been definitively identified. But the hash rate essentially dropped because of concerns of the overall security of the Bitcoin network. And I know that's been a thing that's been coming up all over the place. We've been talking about the extensive power that Bitcoin requires to keep running. The inherent risk of centralization because of cheap energy and easy to recover fuels to add more mining power to the network, so you can actually centralize mining based on your country's resources, and we're seeing that now. Okay, so recently, I believe it was actually yesterday. All right, so yesterday, David Schwartz comes out and he writes a letter, the XRP Ledger, Fostering Industry Performance and Innovation. And he basically came out on Twitter and said he wanted to write a letter explaining and clarifying the use case of XRP. And he said, I just want to give it a little promotion because it's deserving to be shown how impactful it is and how it meets the requirements of regulators and how it meets what the needs of people around the world. And I'm not going to read the entire thing, but it basically says XRP is a decentralized digital asset. It was built specifically to solve problems with global payments. It is fast, reliable, and scalable. XRP's utility as the best digital asset for payments separates it from other digital assets and blockchain technologies. The XRP ledger is a backbone of XRP. It keeps a record of XRP ownership and provides a secure mechanism for executing financial transactions and managing assets and accounts. It relies on a democratic consensus mechanism to order transactions, one that no single party can control. Straight out of the words of David Schwartz himself. The guy is a genius. The guy invented this thing. He's the one overseer, the chief technical officer. There's nobody in the world who would know this better than him. And if this guy, I've never seen him come on and lie about any kind of information. He never. It's very true. Everything that he says is very honest. And he's absolutely showing us that the number of settled ledgers has exceeded 50 million. So 50 million ledgers have been perfectly transacted without any kind of failure. It's just, I love it. I love the article. I love what it's saying, and I hope that it gets all across the board. I'm going to be retweeting this for everybody. And he had this funny word in here that I had to look up. It's called fiefdom, and I wanted, but you'll read it. Zero pros value blockchains. Our fiefdom right here. Okay, so ways to interoperate between blockchains, and think less about our fiefdom and more about what we will all set to achieve. So I didn't know what fiefdom was, so I looked it up. Fiefdom is a noun. It means an area over which someone exercises control as or in the manner of feudal lord. So it's basically somebody who is in complete control, and we don't want to exercise our complete control. We want to build this network to start sharing it with the globe. This is a global financial system to help include people into the financial network. It's not supposed to be used to create an even higher level of control than we already have. So he is definitely speaking to the people. He's showing us that it's decentralized. He's showing us that it's for the people. It's a guy. This is a great company to be behind. It's a great person to be behind. Let's keep supporting him. So moving a little bit away from Ripple and into the current financial economy, the Federal Reserve Bank of New York. This is a page right on their website, newyorkfed.org, serving the second district of the nation. This is a statement regarding repurchase operations, okay? So I don't know if you've heard this in the news. I don't know if it's on mainstream television because I don't generally watch TV anymore. But this is the schedule of overnight and term repurchase agreement operations. This is what the Fed plans to inject into the market with freshly printed bills over the next couple of weeks up until October 10th, 75 billion, and it says at least 75 billion, okay? Overnight, at least 75 billion. So could be more. They leave it open. If they need more, they're going to print more. So that's terrifying. It's terrifying to see that the Fed has to print this much money every single day in order to keep bond rates or rates at a specific level. In the total 2008 financial crisis, we printed $800 billion in order to keep enough liquidity in the markets in order to avoid a complete market sell-off. So now we're interjecting $1.2 trillion into the markets over a 14-day period in order to just keep us at the level we're at right now. So I just can't see this continuing in the future. I think this is a very, very, very short-term fix to a very large problem. In other news, LIBOR is due to die in 2021. A few years ago, LIBOR was undermined by a rate rigging scandal in which highlighted ills that might anyway have proven fatal. Notionally, it is the rate at which banks can borrow from each other for up to a year in dollars, sterling, Swiss francs, yen, and euros. It is calculated from daily submissions of panels of 11 to 16 banks, but banks now scarcely tap interbank markets. So that's what it is, and this is how much money it's worth. So the LIBOR rate determines the value in interest on $240 trillion worth of derivatives. So when they get rid of LIBOR, what are they going to use in order to figure out the rate on all that money? I don't know. I believe there's only one guy that has an idea, and it's Brad Kimes. If you haven't followed Brad Kimes, you got to go over to his channel. He's incredibly smart. He's got the greatest theory. He really lays it all out for you. Good guy, deserves your support. So go over there and give him a follow. In recent news, what we started seeing at the beginning of the financial crisis in 2008 were layoffs, sell-offs, banks closing, companies getting gone, and here we go. So we've got tour company Thomas Cook collapses, leaving 150,000 people stranded. Now, this company didn't just collapse after it found where its people were, got them home safely, put its jets on the ground, and then said, no, we're not going to fly anymore, we're totally bankrupt. No, they just decided, you know what, let's just leave everything where we are, okay? Leave everybody in the world where they are, stranded, take all the money and run, right? Isn't that something that we used to see happening? Are these things happening again? Look, Thomas Cook bosses gave themselves 50 million euros before the company collapsed. Chief Executive Frank Frankhauser, who announced the company's collapse in the early hours of Monday morning, has taken home more than 8.4 million since 2014, including 4.6 million in bonus payments. So, totaling 47 million in pay and bonuses over the last 10 years before tanking the company. It's sad. It's sad. Cracks are showing. You can see that a lot of executives are leaving their high positions, and there's a lot of movement in the financial fintech area. So I really think that what we're starting to see is this recognition that our current financial system is just out of date. It didn't work, or it did work, and it worked for a specific amount of time, and now something new has to happen because it's just old and clunky, and we need something faster. And what they're doing is they're taking what they can, and they're getting out while they can, and we're all going to start experiencing this slow switch to a new digital economy. All right. Well, that's it for today's video. I hope that you enjoyed the content. If you enjoyed the content, please like the video and subscribe for more. I'll be doing videos every week or more, talking about Ripple, XRP, and the crypto-related news and how it is affecting today's economy. So, have a good day, everybody. See you in the next one.